As a finance professional in a disrupted business landscape, what does it take to be in demand? What does it take to attract great paying international roles? If you're an ICAN member, it'll just take one exam. That's all it takes to complete the globally recognized CIMA professional qualification and the internationally respected CGMA designation. As a CIMA member and a CGMA designation holder, employers will look at you as a finance professional, constantly acquiring new skills to add value to the business. That's why they'll be willing to pay premium to hire and retain you. If you have 5 years of relevant experience and are an ICAN member, you can directly sit for the final exam of the CIMA Professional Qualification, the Strategic Case Study exam. Start studying the CIMA Professional Qualification. Prepare to make an impact.
Welcome to ICAN-ngr today. It's a special day because it's the 21st day in the month of September 2024. And we're excited to be here. You can call a friend to call a friend. The ICAN-ngr is now Saturday, 12 noon. Every Saturday, 12 noon. Make it a date every Saturday and we'll be excited to have you. My name remains Fumi Olani. You know, when we're talking about some terms as though they exist in our lifestyle, like the International Financial Reporting Standard, which we'll typically call the IFRS. Some people don't know what is set out to do, but of course we know that it's set of accounting rules that are currently used by public companies and even everyone around the world. So right here today, we're bringing an exciting topic your way, and I'm very, very happy to let you know today that we are having the IFRS 18, which is the presentation and disclosure in the financial statement. To do justice to that, the friend of the house, because he's a friend of the house, is the in fact we do everything ICAN-ngr together, and is here to inspire you, to let you know everything that you need to know about IFRS 18. In person of Mr. OJ Samuel FCA, is the managing director OJ Inspiration Limited. But before we bring him into the house or into the studio, I'd like us to go on a commercial break and then we'll be right back. Remember to call a friend to join ICAN-ngr today. Thank you.
Dear professional colleagues, the annual accountants conference is here again. This time is the 54th edition. It will happen at Abuja Transcorp Hotel from 7th to 11th of October 2024. Eminent resource persons have been contacted to present papers at the conference. You are hereby invited to attend this conference, and as your Diamond President and Chairman of Council, I urge you to come prepared. You are going to network, make new friends, see other friends that you have not seen for a very long time. Besides that, there will be so many stories, proverbs, and parables. By God's grace, I hope to see you in Abuja, 7th to 11th of October 2024. Thank you, and God bless us.
You're welcome back to ICAN-ngr, and I have in the studio our very own, the man we cannot do without, even in the institute, bringing our way IFRS 18, the presentation and disclosure in financial statements, Mr. OJ Samuel, FCA Managing Director, OJ Inspiration Limited. I'd like to take his profile. Boy, good morning, good afternoon, Mr. OJ Samuel, like we call him.
Yeah, thank you. Good afternoon. Thank you for having me.
Okay.
And I
All right.
thank the
Now let's
entire
take
ICAN-ngr team.
Thank you so much. I'd just like people to know you better. Of course, we know you. We see you on the tabloids, in the news, everywhere. So, Samuel Joseph Okoye, or just Samuel, is a chartered accountant and a tax practitioner and an ex-banker by academic and professional training. He now focuses on easing the mastery of international financial standards and of the International Public Sector Accounting Standard, International Sustainability Standard, and Associated Standard through the streaming or production of fun but detailed short answer and multiple question answers in the areas. He is a Nigerian centric and believes in the lives of the power. I mean, he lives the power of entrepreneurship and is a leader, a thought leader in every form and in every caliber. He's the founder and chief executive of OJ Inspiration, OJ Books Limited, and Immaculate Metrics Plus, and is married to Mrs. Pauline Okoye. The 16 years of marriage is blessed with 4 children. You're welcome, sir, and thank you very much for always being here for us.
Thank you so much. Thank you for helping me with a very brief because
Guys, you need to know that it's almost
I
10
love it
pages
brief.
and
Thank you.
more. Yeah, it is more than 10 pages, but we had to just give you a nugget from his profile. Thank you so much, sir, for all that you do for the Institute. So I'd like to go straight into the question of the day. Everyone wants to know what IFRS 18 is all about. What is it? What is the bug around IFRS? Let's know about it, sir.
Okay, sorry, I lost you at a point. Maybe it's the network issue. Are you asking about IFRS generally or IFRS 18? I lost that line of comments.
Okay. So about IFRS, and then you take us into IFRS 18. Is that clear?
Okay. Thank you so much. Anyway, it's no longer news. IFRS is a set of global standards that prescribe, that detail, that give the framework for the preparation and presentation of financial statements by certain categories of entities. So there are different frameworks under the IFRS. We have the full IFRS, we have the IFRS for SME, but generally it's just a single set of global, a single set of global high quality standards that prescribes the consideration to be made by entity while preparing and presenting financial statements. So that's what IFRS is all about generally. So now, when we hear about IAS, we hear about IFRS, we hear about certain interpretations, right? Whether it goes with the nomenclature IAS, whether it goes with the nomenclature IFRS, whether it goes with the nomenclature IFRIC. IFRIC is International Financial Reporting Interpretations Committee, interpretations, whether I go with SIC, SIC, Standing Interpretation Committee's interpretation, all of them together are now referred to as IFRS accounting standards. All of them are referred to as IFRS accounting standards. So back to the IFRS 18, this standard has just been issued in April 2024. It is a standard that has done a reconsideration of the way items are presented in the face of financial statements. Specifically, IFRS 18 has brought about a clear-cut demarcation in the presentation of line items that are shown in the face of what we call statement of financial performance. Currently, we have IS1. IS1 deals with presentation of financial statements. The issuance of IFRS 18 supersedes now the provisions in IS1. In other words, to apply IFRS 18, IFRS 18 is going to take the place of IS1. So what we see in IFRS 18 is that income and expenses reported in the income statement into 5 categories. So under IFRS 18, we have a categorization of income and expense item into 5 categories under IFRS 18. We have the operating category, we have the investing category, we have the financing category, we have the income taxes category, and we have the discontinued operation category. Those are the 5 categorizations of income and expense in the face of your statement of financial performance. Before now, we do not have such classification under IAS-1. Recall, under your IAS-1, you have income and expense classified either by the nature of expense method, typically, or by the function of expense method, typically. So if you go by the function of expense, right, you have your revenue less cost of sales, you have your admin expenses, selling expenses, you proceed downwards, right? There are no proper clear-cut categorization. Why? I may choose to report impairment as a standalone item. I may choose to report impairment within administrative expenses. I may choose to report impairment somewhere along the line, right? I may even want to deal with certain compensation or recovery, presenting them in a diverse of way. So if you look at IAS-1, there is really no clear-cut. When you say profit before tax in IAS-1, at what point, what is the makeup of the item giving rise to profit before tax? There is no single line item. There is no single subtotal, right? There is no single subtotal under IAS-1 that gives you profit before tax. It is not a line item naming under IAS-1 in any form. But what the board has done under IFRS 18 to see, do you know what? Let us categorize income and expense into 5 categories. We have the operating category, we have the investing category, we have the financing category, we have the income taxes category, and then we have the discontinued operations category. The purpose is this. When you are comparing 2 entities or 2 companies, you need to be sure the total or subtotal of profit or loss item that you are comparing. I might have chosen to report my investment income, maybe dividend receivable as part of my other income, for example, right? Or maybe there is a reversal of a certain impairment. I might have chosen to report it under as a line item within other income, reversal of impairment. Another entity might have chosen to report it as a netting within its admin expenses. So in other words, what entity A is reporting as its other income amount will be different from what entity B is reporting as its other income amount. Why? Because entity A has reported reversal of impairment loss within its other income, but entity B, for example, has reported its reversal of impairment loss as an adjustment of admin expenses. So the purpose of this categorization is to create uniformity when you compare profit line item or when you compare subtotal or total, you're actually comparing apple for apple, orange for apple, orange for orange. So when you deal with the income and expense or expenses relating to operating activity, the core essence of an organization, the line item you arrive at is called operating profit or loss. That is an introduction of IFRS 18, a clear-cut standard line item introduction, operating profit or loss. Now, after the operating activity, you now deal with those income and expenses that arise from your investing category. Those assets, right, that you've made investment in that generate return, or those set of assets that generate return independent of the operation of the business, e.g. investment property, e.g. investment in shares, for example. Those income and expense, when they are now reported after the operating category, right? So after operating category line item, I've said you get your operating profit or loss. That is the line item. You then consider the income and expense flowing from investing activities. When you consider it, you now sum up or add up, you now get another line item called profit before financing and income taxes. So one by one, operating profit or loss from operating category. When you net the income and expense from investing category, you now arrive at profit before financing and income taxes. So at that stage, you now take on income and expense that are related to financing activity. All of those are finance cost, your finance income, and associated income and expense in that space. When you consider them as the next stage and net down, you get a new line item, right, which is your typical profit before taxes. The common one we are very used to, profit before tax, PBT, PBT, PBT. That is what you get. So from there, you now deal with the income taxes, which is the netting of the current and deferred tax movement for that period, right? After that, you get another line item. before you now consider if there are discontinued operations, maybe component of an entity that has been disposed of, right, or an operation discontinued. So the net gains or loss or profit from that discontinued arm of the entity is then reported afterwards. So when you then net, you now arrive at your typical profit or loss for the year as we have it. So it's just a rearrangement, a reclassification of income and expense under this 5-line item. So that is the main focus of IFRS 18.
Interesting. I hope everyone, you have your jotters, you have your pens, because I've been taking notes of some details that have been shared here. And I see so many comments already, people saying, well, Brother Immaculate to the studio today. Thank you. So I see Gideon, Oladipo, FCA Lagos. Thank you. Christiana Onwora. Thank you. Oluwatosin Ogundele. I see Ade Michael, Enigbokon. I also see Oluwatosin Ogundele, Lillian Odiasi, and I see Chief Registrar, and he sent his regards. Says we have the Immaculate in the studio today. I say good morning, my professional colleagues. Welcome to another Saturday loaded with a lot of IFRS goodies from our own OJ Samuel, the Immaculate. Happy viewing. Thank you very much. Chief Registrar and Chief Executive Registrar Olastukomi Lanre FCA. So we see Teresa Moniet. Thank you so much. And Fumie Amao. I also see Fagbala Temitakwe. He said it's nice to be here again for another enjoyable professional weekend. Jollof via IFRS routes from the ancient city of Ibadan. Fagbala Temitakwe, thank you very much for joining us. So you have been taking us on this tour of IFRS. And my question now is, how is financial and corporate reporting affected by this IFRS?
Yeah, now flowing from the explanation I've given, for entities, for consultants, for auditors, for reviewers of financial statements, maybe as a peer review team or something, we now need to begin to get ready, right? Because currently the standard will become mandatorily applicable from January 1, 2027, issued in April 2024, but not yet compulsorily applicable. It will become applicable from January 1, 2027. However, recall, from January 1, 2018, or maybe for the accounting year ended in the future, by December 31, 2027, we are going to have a comparative year because we do comparative reporting, right? We do comparative reporting. So the comparative reporting to 2027 will be 2026. I repeat, the comparative reporting period to 2027 is 2026. Therefore, reporting entities will need to begin to do some kind of pre-readiness, right? Pre-readiness in terms of looking how they're going to begin to restructure, right? Reaggregate or redisaggregate, so that the line item that will be preparing, so this is the way it's going to work. In 2025, which is next year, I will expect organization, right, to begin to do a whole lot, right? Because by 2026, those organizations will need to have two versions, I repeat, two versions of their statement of profit or loss and other comprehensive income. One version in line with IS1, which is still applicable until 2026 year end, and another version in 2026 in line with IFRS 18. Why is this so? Because by 2027, when we're presenting the 2027 financial in line with IFRS 18, we are going to be presenting a comparative, which is going to be that of for 2026. So the best bet to get ready is that by 2026, when you are preparing your account, you have dual accounting templates, right? One for IS1 and one for IFRS 18 for 2026, because in 2027, you are going to present it out of 2026 as a comparative information in your financial statements. And that will mean from now to 2025, entities will need to look at the accounting system. They need to look at their software. They need to look at how they aggregate information, how they map accounts to ensure that they've achieved So to answer your question, these entities and consultants, they should be they have a mapping to achieve the aggregation of income and expense from all assets, liabilities, component of equity, and in such a way that they now dovetail into the 5 categorization required under IFRS 18. That is what entities, consultants, auditors, reviewers, analysts are required to begin to deal with now as a preparation towards that future compliance.
2027. Oh, great. So I hope all the consultants are listening. Our chartered accountants, are you listening? You don't want to be caught unaware. 2027 is almost here. So, sir, are there provisions in the standard that would give clear-cut guidance on this differentiation between the operating category, the investing category, the financial category, as it would have it on the financial statements?
Yeah, exactly. A very important question. Thank you for that question, because I
but
wake
of
up today
course,
and say this one is operating
yeah,
category.
yes, sir. But of course, sir. Sorry to interrupt. But of course, you would also please let us know how this will affect the overall financial statement, looking at IFRS 18 in its own self.
Okay, if I got it correctly, but maybe I can still take it further when you rehearse because of network. Now, this is it. A very important question here. You see, now an entity may choose to report an item as operating today, and tomorrow say no, it's investing. Or the other day say no, this investing activity is an operating activity. So that possibility of unguarded duplicity in classification have been prevented by the provisions of IFRS 18. So the question is, there's a question that needs to be answered. What is the main business activity of an enterprise or an entity? What is the main business activity? Now, in analyzing, the standard makes a provision. You see, let me explain. IFRS 18 has 4 appendices. 4 appendices. We have Appendix A that deals with all of this issue of definition and all of that. We have Appendix B that deals with, is an application guidance that deals with the consideration that should be made to enable an entity to come to the conclusion, conclusion into the income and expense, right? That should come, or that should be considered, within the investing category, and the income and expense that should be considered within the financing category. Ordinarily, operating category kind of income and expense are often straightforward. So the question is, for certain institution, right, they need to disclose in their financial statements the evaluation made, the judgment considered in our of income or expense as either investing, as either financing category. It is very key. Let's take, for example, for a financial institution,
Mr. OJ Samuel. Okay. I see. Okay, I see there's some interruption in his network. But of course, we've been learning all about the IFRS 18, and I hope you've been taking notes. Right now, in fact, the Society of Women Accountants, they're presently having an event, and I happen to be there. The Institute is set out to pass knowledge at all times, and it's been an interesting conversation on how we can shatter the glass ceiling, owning our career path, and leading with authenticity in today's workforce and as an entrepreneur. So there are different opportunities for us to learn in your district, in whatever area you belong. Please participate in committees, participate in technical discussions, and be ready for the AAC. I hope you're ready. I hope you are registered. The chairman of AAC committee came in 2 weeks ago to tell us all about the conference. I hope you're ready and you're taking this seriously, because we need to network. It's all about networking, it's all about passing knowledge, knowledge sharing, because there's so much gap, there's so much going on in the society. And of course, we want to learn and learn and learn and learn. Mr. OJ, are you back, sir?
Yes, I'm back. I'm back.
All
I'm
right,
back.
thank you. It's okay. You can go on, sir.
Okay, so I was saying, in relation to your question, how, what are the considerations to be made in deciding, in determining, or in arriving at the conclusion that an income or a set of expenses are within a certain category? So that's why I said in IFRS 18, when you go to Appendix B deals with application guidance. It elaborates what is contained in the core body of that standard. You see, you need to evaluate. The question is, what is the principal business activity of an entity? What is the principal business activity of that entity? So the principal business activity of an entity will give a clarification as to how an income or an item of expense should be classified. Let's take, for example, if you're a property company that is into the buying, development, and sales of property building, your ordinary activity, right, is the construction and sale of building. That is the ordinary activity. It is different from another entity whose business is manufacturing, but that has certain event center, right? Maybe warehouse converted to rentable event space. And such manufacturing company makes rental income from such event center. Therefore, such event centers, right, the income and expenses related to such event centers for that manufacturing entity will be reported under the investing category, because the primary or the principal business activity of that manufacturing company is manufacturing, production, and sales. But for a property management company that that constructs and sells, or that makes rental income generation in its ordinary course of business, so all form of rental income, all form of property-related income will be classified within its operating category. For a bank, for example, a bank is into what? Deposit collection and creating of risk assets. So all income and expense concerning that core process of deposit mobilization, right, credit creation, other financial intermediation fee and income will be reported as operating activity, right? But when you invest in a subsidiary or invest in another kind of SPV, as the case may be, outside its core operation, so the income and expenses related to that investment will be reported as investing category. Now, financing category deals clearly with costs of sourcing of fund and payback on the cost of fund employed, right, to support the operation of an entity. For a bank, some funds borrowed, right? Some funds borrowed may constitute, maybe a fund might have been borrowed for something. Part of it is use of branch expansion, right? Technology acquisition, and part of that fund may be used for granting of credits, right? So you need to bifurcate, you need to divide that borrowing into two categories. The income and expense related are of two categories. A portion of them will go under the financing category. Those don't have to deal with expansion, branch expansion, technology acquisition, and all of that. And the other one that have been used maybe for granting retail credits, concessional loan, and all of that to classified people in the portfolio. That will be reported under the operating category. But my point is, IFRS 18 has given a key consideration, which is what is the principal, what is the main activity, the principal activity of an entity. By analyzing the principal activity, what you will call what they do in the ordinary course of business, that is going to throw up whether an income or an item of expense should be classified either as operating, either as an investing, or either as financing category. But Appendix B clarify all of these considerations that will guide the judgment of an entity.
Thank you very much. Thank you for breaking it down that well. You see, when you have a teacher, you really cannot compete with that teacher, because the teacher is forever a teacher and it passes the knowledge as succinct as possible. Thank you so much, sir. So, what are the management or defined performance measures that you can tell us today?
Okay, Okay, yeah, yes, I've not spoken on that. You see, if you look at earnings releases, financial report, an entity may tell you, okay, our EBITDA, EBITDA is a common terminology, earning before interest, tax, depreciation, and amortization, right? Now you may hear things like, free cash flow, this and that. The question is, these terminologies that are used to communicate to the public, that are used for earnings releases, right? Do you get that? Are used for earning releases, that are used for investor relation communication. If this nomenclature, this item, are not as provided in IFRS, I'm just giving you the summary. You see, you are using the terminology that is not found in any of the IFRS accounting standards. You are using the terminology that is in quotes, that is not regulated or prescribed in line with any standard in IFRS. Therefore, for such terminology, you need to relate. The standard requires you to do you know what? That can you refer to the line item? Can you refer to the line item in the face of the statement of financial performance that terminology you are using pertains to? So in summary, a management-defined performance measure, is an item or an amount or a disclosure made by an entity that is not contained in IFRS 18, one, that is used in press earnings or other releases, but not related to any item in the financial statement, right? Or it may even be an item in the financial statement that an entity has given an emphasis upon, a huge emphasis. The emphasis maybe it has the temperance of being skewed in certain way, right? So all that kind of info, management defined performance measure, right? They are that what we mean. So they are management defined. They are not contained in the standard. But I have the right to say my EBITDA is this. My earning before tax, interest, depreciation, and amortization is this. I have the right to say, okay, my free cash flow after investment, this is this. I may use such terminology for my communication. Those are management defined performance measures. They're okay. But the standard has a requirement. Please, whenever you use any amount, any item that is a management defined performance measure, you need to please reconcile, you need to connect it, you need to index it to the line item to be total or subtotal in the face of the income statement, right? And the adjustment that needs to be made to that subtotal or total in the face of the financial to arrive at the terminology you are using. Let's use the EBITDA example. You said earnings before interest, tax, depreciation, and amortization. In our arrangement, look at the 5 categories I mentioned then. We have operating profit or loss. We have profit before financing and before tax. And we have profit or loss of the year. This 4-line item, there is nowhere within this 4-line item where there's anything called earnings before interest, tax, depreciation, and amortization. So the likely line item that should be considered before that, right, will be the PBT, the profit before tax. But in that PBT, in line with IFRS 18, you need to adjust for depreciation, you need to adjust for amortization, right? You need to adjust for interest before you arrive at what you are calling earnings before, interest, tax, depreciation, and amortization. So management defined, performance measure is any measure, any amount, any line item that is not provided for in line with IFRS accounting standards or not contained in IFRS 18 that an entity uses to communicate to the public, to communicate for in earnings releases, to communicate with the investors, or it may even be an item in the face of the financial, but that has been emphasized in a certain way, right? Emphasized, that has been amplified beyond the meaning of that line item in the face of the financial. Therefore, when entities communicate with management defined performance measure, they need to do a disclosure in the financial, providing a reconciliation of how that defined measure by them, how that management defined measure reconciles with the stated standard line item contained whether as total or subtotal in the face of statement of profit or loss or that comprehensive income. So that is what management defined performance measure is all about.
Thank you so much. So, in fact, it's been funny here because, I mentioned that Swan was having an event, and then some of them were looking for, oh, where's Fumi, where's Fumi? And then I just saw them walking. So it's such a great honor to be here speaking to you and learning from you. And I know that all of them are logged in to listen to you equally. So we'd like to go on a break, and when we come back, it's still ICAN on air. Remember, we're discussing IFRS 18, presentation and disclosure in the financial statement. And we have in the studio Mr. OJ Samuel, FCA, the managing director, OJ Inspiration Limited, and we call him Immaculate. So we'll be right back after the break.
In Abuja for the 54th ICAN Annual Accountants Conference, a prestigious event and the largest gathering of accountants in Africa. This year's theme, Governance Reimagined, Mapping the Future, from October 7th to 11th, 2024 at the Transcorp Hilton and Abuja Continental, former Sheraton Hotel in Abuja. You will experience world-class and groundbreaking plenary sessions on economic reforms, social contract, and nation building. Explore opportunities in agriculture, export, real estate, technology, logistics, and transportation at our dynamic business workshops. We're excited to offer a world-class conference experience featuring renowned speakers, cutting-edge insight, and unparalleled networking opportunities. To ensure a seamless stay, we've partnered with Arab to provide exclusive discounted rates for conference attendees. Book your accommodation through our dedicated link. We can't wait to see you there. Ready to join this transformative event? Register now at the dedicated link below. Need assistance or questions? Let's connect. Reach out to Kunle or Gibson for a personalized support. Don't miss this chance to make a lasting impact. We look forward to welcoming you to Abuja.
You're welcome back to the studio. It's ICAN on air, and today is Saturday, so it's not the regular Thursday event. It is now 12 noon on Saturdays for ICAN on air. So please inform everyone. We've been sending a lot of publicity out there, but some people still don't know because I got so many information on Thursday saying we're waiting for you online. Please join us on Saturday. Don't miss it every Saturday. And I'm still with OJ Samuel, FCA, the man that lectures the crowd. When you say crowd, I mean multiple of crowd, and he still passes the knowledge. Thank you very much for putting us through on IFRS 18. We've been discussing so many things, and I'm so happy that today we are discussing everything around the investing category, the operating category, the financing category, the deadline of 2027, and how people can have a comparative ready for 2026. So right now, I am just going to ask you everything around IFRS 18 and how it affects the equity of reporting entities on applications, sir.
Okay, thank you very much. Number one, I want our audience to know application of IFRS 18 has no effect on the equity of entities, zero effect, and this is the reason. IFRS 18 is a presentation standard, is a disclosure standard. It is not a measurement standard. It is not a standard dealing with measurement, right, of an asset, of a liability, or of a component of equity. So it is not a measurement standard in that regard. That's number one. Number two, it is also not a recognition standard, right? It is also not a recognition standard. Only recognition standards or standards that deal with recognition and standards that deal with measurement can affect equity. Only the standards that deal with recognition or measurement that can affect equity. An extension of what can affect equity is classification, but that classification is only within statement of financial position. When you choose to reclassify a preference share, for example, maybe after evaluating its attributes or features in line with IS, and you come to the conclusion that that preference share is a liability, that would mean you need to reclassify from it being a component of equity to being a liability, financial liability. Or if your judgment states that that preference share is an item of equity given its feature, so in that case, it will affect equity. But IFRS 18 is only a presentation standard and a disclosure standard, and it has no effect on equity. Now, let's practicalize it. What we are saying, under IS1, you have reported other income to be 2 million. Within your other income, part of the money related to dividend received, for example, right? Now, dividend received, for example, right? Part of the money relates to the income you made by temporarily placing a loan you have taken in an account while waiting your use of that loan. Two things. You've taken a loan from a bank, but you are waiting in line with your project timeline to disburse or to use up that loan. You put it in maybe in an overnight call, right? So you've taken a loan, but that loan has been placed somewhere and is earning an income, a finance income. Under IS1, if you had reported both the finance income on that loan placement plus the dividend received, right, within your other income, that is what you might have done under IS1, within other income. However, under IFRS 18, the dividend received will be reported within the investing category, right? It's going to leave that line item we're calling other income. You are going to report it within the investing category. That's number one. Then the finance income you've made, you are going to report it within the financing category. What has happened? You've only done a reclassification in the face of the financial statement. You've only done a reclassification. Ultimately, your profit for the year remains unchanged. Your profit for the year remains unchanged. You've only repositioned them from other income to one going into investing activity category, to another one going into financing activity category, and maybe both of them leaving operating category classification. But ultimately, the profit for the year remains the same. And the profit for the year plus the net other comprehensive income are what go into your retained earnings, right? In arriving at your retained earnings total, which add up with other component of equity to give you your equity, right? Therefore, quantitatively, IFRS 18 does impact on the equity of an entity, whether for the comparative year or the current year. It is not like a transition we did under IFRS 1, where you needed to remeasure assets, remeasure liability, reclassify, recognize, derecognize, that impacted on equity, but this has zero impact on equity. Thank you.
Oh, straightforward. Thank you so much. That was quite straightforward. We have questions already. Kainde Any Lolo Boy saying, Madam Fumi, please can I get the link for the SWAN program? Yes, I mean, if you're not far from Ikeja, is at Adam and Eve, Ikeja GRA. So you can come by or you can get the link on the platform, on the SWAN social platform if you don't. But of course, we'll see what we can do about that. So we also have AA Akio Deco. He says, you are really the man for the topic, and I agree with him. So, OJ Samuel, you're the man for this topic. Fatai Odetunde, I thought the program is Tuesday and Thursday. No, the program is now Saturdays, 12 noon. Always be here, 12 noon. Even if you're at Owambe, please listen. Plug in your earpiece and then connect with us. We are always here with you. So we have a couple of questions already, sir. And I see a question from Tijani Oluwatobi Joshua. It says the presentation of the income statement in line with the IFRS 18 is similar to how cash flow statement is prepared. Then will the presentation of cash flow statement change or will it remain the same? I thought same too.
Thank you very much, Mr. Tijani Oluwatobi Joshua. Yes, yeah, it looks similar, right? We just want to know how you're faring under your operating activity, investing activity, and financing. That is the purpose of the designation into the 5 categories, right? So it is similar to what you have in your statement of cash flow. Does it mean that what you have in cash flow will change? No. The presentation of statement of cash flow remains the same. Nothing has changed and nothing is changing. No. Okay. Now, that is on one hand. Now, secondly, you see, by the virtue of applying IFRS 18, something happened to IS1. Certain provisions in the current IS1 have been relocated to IS8. We need to take note. Certain provisions of IS1 have been relocated to IS8. Provisions, things dealing with the going concern status of an entity, number one, the accrual concept, number two, issue like disclosure of sources of estimation uncertainty, number three. These items are currently contained in IS1. But with the issuance of IFRS 18, all of those things dealing with judgment concerning accounting policy, even the significance of an accounting policy, they'll be relocated away from IS1 into IS8. I'm saying this based on the question asked. The only standard that is massively affected, through the introduction of new paragraph, is the relocation of paragraph from the current IS1 to IS8. And let's take note, when an entity applies IFRS 18, because an entity has the evolution to apply it before January 1, 2027. We call it early adoption, right? An entity has the right to do that. But when you do that, the version of IS8 that will be going with it, it is no longer the current one. The name of the current IS8, is accounting policies, changes in accounting estimates, and error. That is the name of the current IS8. However, it has been changed. There is a version of IS8 that has brought a change. So by the issuance of IFRS 18, IS8's name has changed. The name now is Basis of Preparation of Financial Statements. The new name of IS8 is Basis of Preparation of Financial Statements. I'm not saying it is applicable now, no. But it is in the future when you apply the IFRS 18 version that replaces IS1, you are going to apply the new version of IS8, which is now called Basis of Preparation of Financial Statement, in place of the current one titled Accounting Policies, Changes in Accounting Estimates and Error. So that is the only standard that has been massively affected by IFRS 18. So IS7 cash flow is not affected. And the only other effect you have on all other standards are just nomenclature change in various aspects of all other standards, apart from two standards that were not affected in any way. IS 23 borrowing cost and IS 39. All the other standards were affected by way of nomenclature change, but the massive effect is on IS 8 and IS 1.
Okay. So while you're talking about it, sir, is there an accounting software implication on this transition to IFRS 18? And what can you say are the tax implication on the application of this IFRS 18?
Okay, let me take them together quickly. Number one, let me start with the latter question. What are the tax implications by the application or by virtue of application of IFRS 18. Now, let's go. The question is, what are our tax basis or profit basis under our tax law? Right? When you compute, what do? You compute total profit or taxable profit. You compute taxable profit, for example. Right? Now, this profit basis or tax basis are a remeasurement of an accounting position, whether you're accounting profit or an accounting loss. It is adjusted. So the summary is, by the virtue of the application of IFRS 18, there is no tax implication other than the usual adjustments you are going to do to your profit before tax. That is it. Like, it is not a measurement standard, right? It is not a measurement standard. It is not a recognition standard. So whatever you get under your PBT, you are going to adjust accordingly in line with either your CETA, your Petroleum Industry Act, your PPTA, your PITA, and the case may be your CGT and all of that. So you are going to adjust in line with the law. So it has no tax implication like you pay more VAT, like you pay more withholding tax, like you pay more profit. No, it doesn't. No effect, nil. Same things remain under the tax provisions. Now, for the other one on the software, yes, on the software. Software, you know, different software. Some people use Sage, some use Tally, some use Sun, some use SAP Financial, Oracle Financial, all of those software. Now, what it means is this. You need to go to a chart of accounts. You know, chart of accounts contains certain line items. Those line items are not ledgers. Those line items are not accounts, right? They are not accounts. They're only a summation, a netting of all the heads and subheads within ledgers and accounts to get what you call a control total. E.g., revenue. Revenue is not an account per se, no, right? It's not an account per se, like one account would credit it. It's a netting of various revenue sources from goods, from services, from this, from that, from the netting will give you revenue. So this is my point. For the software, entities will have to begin to, they are going to need to modify the name of the line item of their software. They are going to need to modify the names of certain line items, number one. They are going to need to remap. Remap means do it in such a way that income and expense of certain type can net to give you operating profit or loss. Do it in a certain way that income and expense can net to give you what you call profit before financing and income taxes. Do it in such a way that is going to give you profit before taxes. So that recycling adjustment to chart of accounts in line with the income and expense behavior in their software is what is needed in any accounting software whatsoever.
All right, thank you. I see a lot of comments. Akrinola Latif, he said, Joe, I downloaded the standard few days ago, but yet to go through it in details. The lecturer is very succinct in his analysis. A big kudos to him. Kudos to you, sir. And then Dr. Akiode, he said, this is the AI, the man from last month. Yeah, thank you so much. We acknowledge you. You are always a friend of the house. So I know we have just a few minutes to the end of the program, but I have a couple of questions that I may want to ask you. And this is in relation to how we can give a kind of a guide. What guide can you give for consultants that are to work towards this practical implementation of IFRS 18, apart from the software that you have mentioned? And what is the implication for reporting entities and consultants in transiting to this IFRS 18, sir?
Thank you. Now, number one, you see, the concept of the principal business activity or the principal activity of an entity is key. So, you know, there need to be a documented, not today someone say, I feel like this is an investing item. I feel like this is an operating item. It's not about feeling. There's no feeling about it here. There's going to be a documented position, right, of evaluation done for most business to come to the conclusion that these are our principal activities. So if these are our principal activities, any income and associated with the principal activities will come under the operating category. So there's need for, you know, a comprehensive evaluation, right? And the documentation of the methodology, right? The judgment, the evaluation done in coming to that conclusion. So with that, it will help any entity and its consultant sort out the issue of operating category, investing category, and financing category. That is number one. Number two that has to be done, very important, is that you don't have to wait till 2027. No, you don't have to wait. This is the moment to look at your chart of account, whether you are using software or not, right? How do you aggregate line item? Even your schedule of disclosure for things concerning your incomes, how do you aggregate them? So you need to do a remapping now, a remapping of your income and expense item in such a way they help you total up or add up into this standard line item that must be seen in the face of financial statement. That's number 2. Now, number three, very important. You see, this is the time to begin a dry run. Instead of a theoretical gap analysis and just stopping there, a dry run is from 2024 year end, 2024, 2025. What stops an entity from doing a dummy run, a dummy presentation of their financial in line with IFRS 18? In that process, you see, it will enable them to begin to aggregate data, to have information, records in such a way that they can extract what they need to comply with the line item disclosures in IFRS 18. You don't wait on the 2026 to begin to do one Excel approach of copy and paste and all of that. No. So this is the time to do that dry run. So that to be sure that you have a system that can generate data or information in such a way that enable you comply with the presentation of this line item in line with IFRS. So that is what organizations should do practically.
Thank you so much. Martin Zobaze says good presentation and is trying to get your, to thank you and also say thanks to Fumi for your insightful questions that reveals more insightful understanding from encyclopedia. Interesting. All right, thank you. So in closing, ICAN is always open to partnership with people like you. We're already in different partnership platforms, so I understand that you're already there. But what are the other things that you can advise accountants, tax consultants, and everyone that wants to implement this? And are there ratios and financial statement analysis implication of this new standard? And how can we get started on it?
In fact, I'm happy you asked this question. I'm very happy, right? Because traditionally we say current ratio, current asset or current liability. You see, a lot of things have changed too, but they seem not to have been reflected in our curriculum and the way we do things. So for ICAN will need to look at a study pack right now. Not waiting, you prepare the students way ahead, right? So, and do you know what? IFRS is very critical. That is the way things are shown in the face with the question. It's very critical. So, number one, Madam Fumi, ICAN will have to, as a matter of immediate effect, right? Update its syllabus across level to begin to reflect the new future. Right? It's not a case of still calling this. No, for example, now under IFRS 18, we no longer have a nomenclature called statement of comprehensive income. I didn't mention that. We no longer have that nomenclature. Again, you either call it statement of profit or loss and other comprehensive income when you present the profit or loss and the OCI together, or if you present the profit or loss separately from the OCI, the resulting profit or loss from the profit or loss OCI are called statement presenting comprehensive income, not statement of comprehensive income, statement presenting comprehensive. So I can have to do a immediate overhaul of the financial reporting and corporate accounting syllabus to reflect these changes. That is the key thing I'm going to want the institute to look at. And for the ratio analysis, having understood the categorization, operating, investing, financing, income taxes, disposal, you can know the analysis to do while doing your analysis.
Thank you so much, sir. We truly appreciate your being here today. And we know that next time you'd always be here with us. An inspired life. I love that. OJ Samuel, FCA. Thank you very much. And we wish you a lovely weekend.
Thank you. Thank you very much. Thank you all for having me. Bye.
Thank you so much. All right, everyone, we want to say thank you very much for being part of this insightful, educational, and involving topic, IFRS 18 with OJ Samuel. And we have a couple of announcements before we close for the program. So we have experienced top-notch support like never before. Our ICAN contact center is now faster, more efficient, and ready to help. We're open to calls, to your emails, and chat from 8 a.m. to 4:30 on Mondays to Friday. Also, the big elephant in the house is the 74th induction ceremony, which is coming up very soon. We want everyone to be inducted and we want everyone to be part of this noble institute. So December 3rd to December 4th, the induction fee is 130,000 naira. So that's the little one in the house. And then now, so the big deal is the 54th annual accountants conference. I'm looking for a premium stay during the conference. Experience unmatched comfort at the Abuja Continental Hotel, perfect situated for easy access to all the conference events and conference centers. Take advantage of the special discount. Transcorp Hilton is where the conference will take place in Maitama, Abuja. And the program is from the 7th to the 11th of October 2024. The theme is governance, reimagining, mapping the future. If you have not registered, then you are wrong. So many other events, trainings, symposiums going on within the institutes. Please reach out for any more information. There's so much going on: tax and fiscal policy faculty, forensic accounting, inquiries. If you want your PD to be increased, please reach out to the institute and we'll be there for you. At this junction, I just want to say thank you very much, everyone, for this part of this interesting and insightful program. My name remains Fumi Olani. Remember, if you're a SWAN member of SWAN of ICAN, you can come by to Adam and Eve. We have Mrs. Blessing Awoshika, the first chairman of FBN. She's right here educating us on how to shatter the glass ceiling. And from me, it is do have a lovely weekend. And to all the committee members, I say thank you very much for being behind the scenes. We appreciate you and we love you. Have a lovely weekend, everyone. Goodbye.